There will be wealth generation around the world like we've never seen before. And I think with emerging markets, proclivity towards stablecoins and the digital money world, I think Bitcoin will be a very big part of their savings. The correlation between gold and Bitcoin has been 0.14, almost nothing. And I found that interesting.
Cathie Wood's investment framework has never been about isolated assets or short-term price movements. It has always been about identifying regime shifts, moments when technological convergence rewires the global economy, reshapes capital flows, and redefines what constitutes money, value, and productivity. In her latest discussion, Wood revisits Bitcoin not as a speculative instrument, but as a monetary technology evolving alongside stablecoins, artificial intelligence, autonomous systems, healthcare breakthroughs, and even space exploration. One of Wood's most important acknowledgments is also one of her most misunderstood. She openly admits that stablecoins have taken on a role she once believed Bitcoin would dominate more quickly in emerging markets, acting as an immediate hedge against currency debasement and the destruction of purchasing power. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
We did focus on stablecoins, usurping one of the roles we thought Bitcoin would play in the emerging markets, and that is the insurance policy, the hedge against destruction of wealth and purchasing power. Stablecoins are serving that purpose much more now than we expected. But that doesn't mean that the digital gold role is going away. In fact, if anything, with the gold price hyperventilating, that we see with intergenerational wealth transfer, a lot more price appreciation because of digital gold. And even in the emerging markets, right now they are hand to mouth. But if we're right, and all of the new technologies that we discuss in Big Ideas 26 come to pass and proliferate around the world, there will be wealth generation around the world like we've never seen before. And I think with emerging markets, proclivity towards stablecoins and the digital money world, I think Bitcoin will be a very big part of their savings. The correlation between gold and Bitcoin has been illuminating. Put it in a year-end letter that I did. From 20 through today, so we caught the swoosh from COVID and we've caught the various corrections since then. The correlation between gold and Bitcoin has been 0.14, almost nothing. And I found that interesting. We throw it in there as digital gold, and it is digital gold. But there's still a lot of education, I think, to take place over the next 5 to 10 years. Just trying to get some perspective around gold and how does this compare to what has happened historically to gold. Now, what we did is we took the market cap of gold relative to M2. Now, it was US M2, but I don't think it would be much different. And the reason we used US M2 is we could get it back through the Great Depression. And so if you look, and we did this today in our economics meeting, if you look at gold relative to M2, we're at a 1.56. And there's been only one time we've been higher. And that was in the Great Depression when we got to 1.71. And back then, the way we got there was gold was flat. It was fixed at $20.67. But the money supply imploded. So the denominator imploded, sending that ratio up to all-time highs. The only other time it's been anywhere near here was in the late 70s when, of course, we were having gone off the gold exchange standard. We'd been a decade or more in a very bad inflation. Inflation interest rates at that time were in the double digits. But then once the Volcker/Reagan plan started working, and I think we're in a very similar environment right now. I think Trumponomics is Reaganomics on steroids. Once that started to gain traction and people understood the returns on invested capital in the United States were going up relative to those in the rest of the world, the gold, that ratio went down for 20 years until 2020. So I think we're in rarefied territory. If I were a holder of gold, I would be uncomfortable just based on the perspective I've just shared.
You'd be selling, Cathie.
I'd be selling. I'd be buying Bitcoin.
Yeah.
Big time. We have featured Bitcoin in Big Ideas since 2017 when we started doing Big Ideas. And I remember in the early days, as we were trying to help people understand what is this in our markets, we were appealing to tech investors. And I remember saying, well, okay, you know what VoIP is? VoIP, VoIP? Well, this is MOIP, money over IP. So, I mean, we were trying to get everybody to relate, to the idea that this was a new technology too, and was going to be transformational in a way that, many people in our industry did not expect. And, as recently as, it was 2020, Goldman Sachs put out a piece about the 10 myths about Bitcoin, or I don't know if that was our retort was, we're debunking these myths. I think they were 10 disses, the reason Bitcoin wasn't a real thing. And so we did our 10 ways to debunk those myths. So think about that. That was as recently as 2020. And then, of course, we moved into COVID and, all kinds of things happened. But, the massive liquidity around the world, sloshed into Bitcoin, of course, and all crypto assets. And then everybody wanted to learn about it. So our Big Ideas, and by that time, we were starting to delineate, why we thought Bitcoin had miles to go in terms of price appreciation. And we delineated it by category: digital gold, institutional investment in a new asset class, emerging market insurance policies against the destruction of wealth, either by inflation or outright confiscation of wealth, and so forth.
Wood reminds us how recently Bitcoin was still considered a fringe curiosity by mainstream finance. ARK has featured Bitcoin in its Big Ideas research since 2017, long before institutional endorsement became fashionable. In the early days, explaining Bitcoin required analogies aimed at tech investors. One of Wood's favorites was money over IP, likening Bitcoin to VoIP's transformation of telecommunications. It was a framing designed to convey that Bitcoin was not merely an asset, but a protocol, one capable of reshaping monetary infrastructure itself.
We do believe that the biggest revenue generating opportunity during the next 5 to 10 years is autonomous mobility of all kinds: autonomous taxis, drones for delivery, air taxis, and so forth. We think the taxi opportunity alone could scale to, I think from a market valuation point of view, $36 trillion from almost nothing now in the next 5 to 10 years. In other words, the wholesale transformation of transportation. That is the largest AI project we think on Earth. Now, the most profound AI project, and maybe some here will disagree, but you'll understand where we're coming from. The most profound AI project is in healthcare. We are going to diagnose diseases in their earliest stages or before as they're setting up. We're going to collapse the cost and time for drug discovery, and we're going to cure disease. So that's the second. But then, and I think Alex touched on this maybe a bit, but this idea that really we have two new worlds opening up, and this is why I'm not pessimistic on employment. Technology, the history of it is it's a net job creator. You can't imagine what a lot of the jobs are, but just ask ChatGPT and make sure to include futurists and science fiction, but you'll get all kinds of ideas. So what are the two worlds? Digital, when you think about it, many people think, oh, I've been there, done that, internet. No. We did not have immutable property rights until very recently, thanks to blockchain technology. So we are now just entering and creating a digital world that can be monetized and can evolve because of the monetization in ways that we cannot understand right now. Maybe we can imagine, and then the other new world is space. Space. When I hear Elon talk about, the orbital data center opportunity, with solar powering everything and taking us away from the bureaucracy here down on Earth and the not in my backyard here on Earth. We've got that, we've got the moon, we've got Mars, we've got a lot to do. And all of this has to do with the convergences of technologies. And so Tesla is robotics, energy storage, and AI. Healthcare is DNA sequencing, AI, and CRISPR gene editing. And if we didn't have Elon and this movement towards reusable rockets, we would be nowhere in space. But now he's opening up space in a way that most people, I'm going to say 5 to 10 years ago, did not believe would be possible.
Cathie Wood's thesis is not a Bitcoin maximalist manifesto, nor is it a dismissal of traditional assets. It is a framework for understanding how exponential technologies reshape value creation and how money itself must evolve alongside them. Stablecoins may dominate transactions. Gold may still anchor legacy wealth. But Bitcoin, in Wood's view, sits at the intersection of technology, scarcity, and trust in a way no prior asset ever has. As autonomous systems, AI-driven healthcare, digital property rights, and space economies come online, global wealth generation could accelerate beyond historical precedent. In that environment, Bitcoin is not rendered obsolete. It becomes foundational,